The end of the year tends to bring about a lot of tax loss selling that investors are sitting on some big gains in some big powerful sectors of the market. They might start trimming those and also take some losses in some of their names that have not performed well. This is typical action and why we're starting to see a lot of movement under the surface late in December. One sector in particular has been a huge behemoth in 2025, and it is under a lot of pressure. In fact, it is the most oversold by one benchmark in a few years. I think there's a huge opportunity around the corner for this area. What sector am I talking about? The utilities sector. So the major ETF barometer for this group is XLU. Here you can see this ETF is down roughly about 10% since its October peak. There are a lot of names in this group that have been really beneficiaries from a lot of the energy consumption needs from hyperscalers and this whole AI trade. A lot of people are worried that the energy needs, they just might be a little bit overstated. And so people have been selling all of their utility stocks. But think about it more in terms of you got big gains in year end. People want to take some of those profits and also reduce some of the exposure that they have in some of their losing names, because we know a new year is around the corner. And that just means there's going to be likely new leadership. Here's why I think you might want to reconsider bailing out on utility stocks right now. First thing is that if you look at the number of stocks under the hood in XLU, right, and you map out how many are above their 50-day moving average, you actually see something super, super rare. The value fell to 3.03%, almost zero. This is the lowest level going back to late 2021. I've got this on this chart. You notice we never approached the 3% threshold over the past 1.5 years. The other thing to note is when we do get these low breath readings, like here in late 2024 and here in April of 2025, which was the tariff crash, we don't tend to hang here long. You tend to see a big spurt of enthusiasm that comes after this because people come to buy the dip. I am expecting we're not going to be hanging around this 3% line for a while. Now, here's why you want to be getting constructive on this type of group, because if I'm telling you from the eyeball test that it looks like it's a good buy, let's go ahead and look at what history says. One of my favorite things to do is do a great signal study. And if we take all of the data going back from XLU, it's roughly about 20 plus years. Here is what we know whenever only 3.03% of those stocks are above their 50-day moving average. I got two buckets. In blue here is all of the years. So 1 month later, XLU's up 3.8%. 3 months later, it's up 3.1%. 6 months later, 6.5%. 12 months, 14.4%. 24 months later, it's up 28.3%. Now, these returns can get a lot better because if you take away 2008, look at what happens. Now, why would I do that? Well, that was a financial crisis. If you look at periods outside of that, it is really, really strong gains. And in this green area, if you got 1 month later, up 4%, 6 months later, up 11%, a year later, up nearly 20%, and 2 years later, up 33.5%. And I should also add that post 2009, almost 100% win rate average whenever you're buying at this low breath reading a year later. So keep that in mind. Areas that I'd be thinking about: hyperscalers. Think of the companies that have made some big deals with hyperscalers. Maybe this is going to be Vistra Energy. Maybe this is going to be some of your Talent Energies. Hey, maybe you're a little bit riskier, right? And you want a little bit more potential upside. Maybe you're looking at Bloom Energy. What utility stocks are you guys thinking about right now?